All right, good morning, traders. Today is January 17th, 2025. We're having an open house today. All right, so thank you for all that came by to see what's going on or to experience the BYOB Trading Room. Thank you. Appreciate that. I want to say good morning to all my visitors and my members. Thank you for being here. My SPY pivot this morning remains at 591.96. Above it, I'm a bull. Below it, I'm a bear. All of the Fab Five are in daily downtrends. SPY, FNGU, QQQ made higher lows and higher highs, closing over their traps over their 17s. IWM and Diamond Dow made lower highs and lower lows, closing over their traps over their 17s. SPY closed with a 2-hour uptrend and a 10-minute downtrend. Gold and silver both in uptrends now, made higher lows and higher highs, closing over bullish traps over the 17 EMAs. UNG and USO both in uptrends. UNG made a higher high and a higher low, closing over a bullish trap over the 17 EMA. USO made a lower high and a lower low, closing over the bullish trap over the 17 EMA. US dollar index in an uptrend closed near the 108.94 area. All right, let's go take a peek at some charts today. All right, first chart we'll start off with is SPY. Okay, so on SPY, we're on the 10-minute chart right here. We have two or three moving averages. Okay, we got the 3 EMA, which is the yellow line. All right, that's the fastest moving average. Then we got the 8 EMA, which is the white line. And then we got our dots, all right? And the dots represent the 17 EMA. Okay, so they're going to be green when price is over it and red when price is under it. All right, then we got one more. It's called VWAP, all right? It's volume weighted average price. That's the burnt brown one right here. Okay? So this yesterday evening we left off with price. You see the 3 EMA, the faster one was underneath the 8. So we left off with a 10-minute downtrend going into the close yesterday on SPY. On the 2-hour chart, we have the yellow line up over the white line up over the 17. So we got candles, the yellow, the white, all over the 17. We have a 2-hour uptrend going into the close. All right. Now on the daily chart, we made a higher low and a higher high, closing over a bullish trap because the yellow line is above the white one. So we closed over a bullish trap and over the dots. Those are the 17 EMA. So we closed over the 17 and over the bullish trap. You can see where we're right now into this downtrend line, trying to transition through it, possibly make a higher high. We'll see what happens. Today's Friday. It's options expiration Friday. Things could get a little bit wild and whippy. All right, let's take a look at the game plan. So the game plan this morning, all right, we're looking for green erases red and red erases green. All right, so this would be the top of where the bulls left off, basically. I'm going to count that as a wick because you can see you got a candle up and a candle back. Going to count that as a wick. So price over this area right here, for me, represents bullishness, all right? The bears wiped out all of what the bulls, the bulls wiped out everything that the bears completed. So you can see right here, price went from, all right, from this location here all the way down to here. Okay, so it went from here, from up top. Okay, price started there and then went down, 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 and that's where they stopped. All right, now the bulls turned around and they moved price all the way back up. So they erased everything that the bears completed. All right, so for me, that's going to be my entry where the bulls are ready to break out over where the bears did their work, all right? So they just erased everything that the bears completed. So we came down, and now you can see price action is coming back up. So this would be my bullish entry in the morning, all right? But I would need, all right, I can't have just a red candle because we're talking about control, all right? In a red candle, the bears have control, right? Anybody disagree with that? All right, so the bears have control because it's a red candle. All right, if it's a green candle and it's just a doji candle, that means it's got like an equal wick and equal tail with a little body in between, like this one right here. Okay, that means pause. All right, that says to me that nobody had the edge in that candle. They're probably just resting or consolidating inside that candle. There's equal amounts of bulls and bears. I want to be in a situation where the bulls are stepping in and making price run away from VWAP. That's what I'm looking for. I'm looking for price action to rip away from VWAP and make a statement, all right? I want to see the bulls make a statement, all right? So I'm looking for a bullish candle to come in here and start moving price up, all right? I don't want it to be a topping wick candle because a topping wick candle represents that the bears pretty much dominated that candle segment. So if we're working with 10-minute segments, that's a 10-minute candle. Now, if it's nothing but all tail in that, all wick in that candle, I don't want a piece of that. All right, because that says the bears dominated most of it. Because you can see the bulls went up and the bears erased it. If it's a big topping wick candle, let me draw one in for you, since I can't find one right off. All right, so this would be a topping wick candle, little body like that. All right, and a big wick that goes up into the sky. Okay, like that. So now that's the kind of candle I want to buy into. See that? The bulls are stepping in, all right? But I need it to close like that, okay? I want it to close. If it winds up looking like this, I don't want to buy that, all right? So I don't want to buy a red candle, all right? If I'm doing bulls, all right, price is breaking out, I want to buy calls. I don't want to buy a red candle because that shows me the bears controlled that candle. All right. I don't want to buy a big topping wick candle because the bears dominated that candle. And I don't want to buy pause or rest. All right. Because that's not moving. All right. I need to see the bulls step in, make a statement. All right. We're ready to go higher again right here. So that would be the type of candle I would look for. That would be the type of candle I would look for. Okay. That's what I'm looking for. Or even this bottoming tail. See that? That tells me the bulls are ready to get engaged there. See that? Bulls came down. Bears pushed it back, but the bulls came back, pushed it all the way back up. All right? So I like that candle. I like that candle. I don't like this candle because that's like a doji. All right? That's not my candle. I like a candle like that. Now, I can find this candle on the 5, the 3, or the 10, or the 15, or the 30, all right? You got to choose your time frame, all right? I like the 10. Sometimes I scoot down to the 5 so I can get a little entry, maybe a little bit earlier. Sometimes it works for me. Sometimes it works against me. Where to set VWAP? Yesterday's close, yesterday's open. That would be our 2-day anchored VWAP right back here. All right. So there's SPY. All right. So that's what we're looking for. We don't want this. We want this. All right. But we want it to close like that. It hasn't closed. It's got 1 more minute to close. Now you get a candle like this and you only got 1 minute left. All right. And you can see the bulls are already taking off. Okay. Me, I don't have a problem legging into that, all right? When it's got 1 minute left, it's a pretty good chance this is going to close up here like this. Okay, that's kind of what I want. All right, pretty good chance that's going to close like that. All right, so there's SPY on the 10-minute. You get the game plan. Price over 593.70. I want to buy calls. All right, so what kind of calls do I want to buy? All right, because I like to leverage my money. All right, I'm still trading. All right, I'm just using options to leverage my money. Okay, so here I like 7 DTE calls and 14 Friday options. I like options that expire on Friday. And the reason I like options that expire on Friday is because they have more open interest. All right, more open interest provides for greater liquidity. All right, I don't want a wide bid ask. All right, I want to be able to get out, with a penny or two in between the bid and the ask. So what we got here is SPY price over 593.70. We got it. We got a candle. That would be a good buy for me right there. Price ripping up over the top of this. And you can see the consolidation, all-day consolidation from most of the day on Wednesday, almost all the day on Thursday. Notice price didn't move out of this range. And now we're moving out of this range this morning. All right, you can see price consolidate over prior consolidation. That's a bullish sign. Whenever price moves up and holds the higher ground, that's a bullish outlook for me. All right, moves up, holds the higher ground, that's bullish outlook. If price moves up and then moves back, that's just neutral. All right, they moved up and then they gave it up. You'll see it a lot, okay? Price moves up and moves down. All right, moves up and then moves right back to where it started. That's just neutral. What we want to see price that moves up and then holds that higher ground. All right, so we want to see the candles go up and we want to see them hold. All right, that's bullish. Either that or they can just keep going up. I'm fine with that too. Either go up and hold or go up higher, that's fine. Either way works for me, all right? Going up and then giving it up, that's neutral, all right? On the bearish side, if, all right, the bears wipe out everything that the bulls just completed, like this breakout, all right, and decide to come all the way back to the point here and then go lower, all right, that's my bearish entry, 590.65. All right, that would be the bulls, that would be the bears wiping out everything that the bulls completed. And now I want to see a bearish candle on the downside. All right, I want to see a decent red candle. I want to see the same thing that I was looking for on the upside, but I want it to be red, all right, on the downside. In other words, I want a decent red candle on the downside. I don't want a doji candle. It might be red, but if it's a doji, it tells me they're pausing right there, all right, or they're resting, all right. I don't want a bottoming tail candle, because that shows me that the bulls dominated, even though it's red, the bulls dominated most of the price action within the candle, all right. And I don't want a green candle, all right. This is supposing I'm going to play short now, and I would be buying puts, all right. I don't want a green candle because that tells me that the bulls controlled that candle. All right, all that makes sense, right? Any questions on that? We want to set ourselves up for success. It's a new year. You get your trading plans out and let's write them so that they set you up for success. This is going to be a formula to print success, all right? Every day for you, all right? You're going to want to have parameters in there, all right? You're going to want to have rules that keep you out of bad trades and put you into good trades, all right? And those are some of my rules. Hey, no dojis, all right? If I'm bullish, no topping wicks, all right? If I'm bearish, I don't want any bottoming. I don't want to be buying bottoming tails, right? It just makes sense, all right? All of this is kind of common sense, but sometimes a review helps you remember it even better, all right? So that's what I'm looking for this morning, all right? Got a nice breakout, got a nice candle, all right? Now I want to see the follow through, Okay, because the bears could come in and just wipe this out. All right, want to see the follow through. Okay, if they come in and wipe this out, that's not a good sign. That shows me a failed breakout, probably coming lower. All right, we'll see what happens. Let's trash all this out. So there's my bullish entry, 593.70. My bearish entry, 590.65. My pivot, 591.96. So above that, I want to be a bull. Below that, I want to be a bear. All right, and then I look for either red erases green for the downside or green erases red. All right, I want to see people step in. I want to see people step up and take it further. So you know what calls you want, all right? I like them $2 to $5 out of the money because they're a little bit cheaper, all right? I don't have a big account, all right? I got $2 to $5 out of the money. I'm not going to get the performance that I would if I was in the money, all right? But I'll get pretty good performance being out of the money, all right? Won't capture it all, but then again, all right, I won't have as much risk, all right? I'm talking about risk. If I have in the money, all right, it's all at risk. Whereas out of the money, it's kind of pared back some, and I'm okay with that, all right? If you don't mind the risk, all right, and you want to buy in the money, just remember they will be more expensive, your calls per share, because that's what it is. It's a contract to buy 100 shares, all right, for 100 shares at a certain price per share. All right? So I like them $2 to $5 out of the money. I like 7 and 14. All right? Now, if we were on Monday, all right, it would be a 4 DTE, all right? Because the 4 DTEs on Monday, and we're closed Monday, by the way, the 4 DTEs will expire on next Friday, all right? So I like them to expire on Friday. Again, I get more open interest. All right, so there's our SPY game plan for this morning. All right, we got the opening candle. All we need when the market opens is a nice green candle to the upside. All right, they already started to break out now. It's 8:15. We still got about an hour and a quarter left to go. All right, they might not be here in an hour and a quarter. We'll see what happens. All right, let's talk about QQQ. All right, let's go to QQQ. QQQ, all right. Bullish, green erases red, okay, over 517.73. So when price gets over here, all right, I see a decent green candle. That's my bullish entry for the QQQ. Bearish entry down here underneath 514.70. All right, that's what I'm looking for. Anytime you see a gap, this is a bullish gap that the bears fail to fill. All right, in other words, price has gone up, but we don't have any candles coming back to fill this gap. All right, that's a bullish sign. Whenever you got a bullish gap like that, that's bullish. That means the bears are weak and the bulls are probably in control. And the fact that price went up and the bulls held it up, all right? It went up and they held it, they held the higher high, or they held the higher ground, okay? That's bullish for me, all right? So I'm going to keep playing bullish until they show me that they're not, right? That just makes sense. They're still bullish. They're holding the higher ground. They're holding the gap open. All right, I'm going to look for bullish trades. Where do I have a bullish trade? Well, when bulls come in a race, what the bears did. Here's the bears. They failed to make a lower low. Here's a low. There's a low. They failed to make a lower low, right? They failed to make a significant lower low. All right? And now the bulls took over. All right? That tells me that they know that the bears are weak because the bears failed to fill a significant lower low. So chances are the bulls are going to come in and run it up higher. All right? because they know they're exhausted. They're tired. See, the bears tried to push it down. They failed. Okay? They failed to make any headway. They failed to make the lower low. So the bulls come in, take over. They know these bears are tired, and they push it higher. That's usually what happens. Either that, they're going to go back up here and test the highs to see if they can push it further back. All right? It's like a game of football. You go over the 50-yard line, back under the 50-yard line. Then the other team gets the ball, and then they push it back. It's just like football, all right? So, and the pivot line, that represents the midpoint, or the 50-yard line for me, all right? So now you can see here's the bulls. See how the bears failed to make significant lower low. There's the low. They failed to make a significant lower low. And now the bulls are taking over and they're going to test the highs. Okay? That's what we got going on. But we don't want to buy just any high. All right? We want to buy a nice green candle high. Okay? Not a topping wick, not a doji, right? We don't want to buy a red candle because the bears are in control there. All right? So we'll see what happens. So there's our QQQ game plan. So I'm going to share those in the chat. I don't think I shared them yet. No, I think I'll share them right now in the chat so you guys can have them to hold on to. All right, so there's QQQ. I'll upload that one. All right, and then you guys can't see this because I'm over here inside the chat and sharing stuff. All right, and share that one. Okay, everybody out there, I will, if you're watching this video, it's going to be either on Twitter or Facebook. It'll be posted here probably in about 30 minutes. All right, so let's get through this, all right, because it's going to be a long video. It's going to take me a while to render it. All right, so there's QQQ. Let's go look at the daily chart. We're going to pick up a clean chart here. All right, this is yesterday's price action for QQQ. All right, bears pretty much dominated that, right? But the bulls made a higher low and a higher high, and they closed over the bullish trap, but under the 17 EMA. All right, so QQQ closed under the 17. All right, let's take a look at Diamond Dow. Diamond Dow makes a lower high and a lower low, closing over the bullish trap and over the 17. Okay, notice the candle is a pause. That's a doji candle. All right, doji. It's a thin, skinny doji. Then you got another doji, then a fat doji right there. Okay, we like candles like this or like this. If we're going to be bulls, we like these two candles there. All right, we don't want a big topping wick where there's more wick than body and tail. Okay, that would be a bottoming tail candle. See that? Nothing but tail down to the downside. Short little wick, short little body right there. Okay, now we got, this is the candle we like to buy. Right? That's the one right there. Just want to see follow through throughout the intraday time frame. So, Diamond Dow. Lower high, lower low. That looks like 430.55. 430.50. So inside day for Diamond Dow. Lower high, higher low, closing over the trap over the 17 EMA. Let's take a look at IWM. All right. Lower high, lower low, closing over the trap over the 17 EMA. All right. Let's go take a look at our technicals. T2122. All right. For all of you visitors, you do not have to have TC2000. Okay. You won't get these stats right here, okay? But it's not absolutely necessary for you to have TC2000, all right? You can still trade with us, all right, without having TC2000. All you can do is ask me. I'll put up whatever you want. T2122, T2123. All right, so here's T2122, and we like to see this bullish momentum. All right, we're looking for higher lows and higher highs. Okay, see the higher low, see the higher high. There's a high, there's a higher high. All right, there's a low, there's a higher low. There's a lower high, there's a higher low. Now we got a higher high, okay? Now we got a higher low. Now we got a lower low. So they're consolidating inside this buy zone right through here. Okay, so that's T21.22. We like to see it. We like to see price in the buy zone, all right? Now this represents about, I don't know, I think there's about 3,000 stocks in the NYSE, and I think they just now opened it up to ETFs, and they're going to include all of the NYSE, which is now about 8,000 stocks. So I don't know if that's going to change the dynamics of the T21.22 or the T21.23. So we'll see what happens, because this is a measurement of the products inside the NYSE. All right, the listed stocks. Okay, so here's T21.23. We were down here. We had a rubber band candle. Price action went down, and the force of nature brought it back up, okay? If they'd have snapped that rubber band candle, it probably would have kept going further down, all right? But we had rubber band. They came right into like a force field, and they came into it, and they pressed against it, and then the energy from the force field pushed price back up over it. This white line, this is a prior all-time high. This green line is a prior all-time high. Price went through this green line. Notice it came down here and consolidated, and then drifted lower in a bear flag, had a breakdown, went into the next prior all-time high, and then the rubber band price action took over, and price brought it back up over that prior all-time high into the falling 200 SMA. So for price action yesterday, you can see the 17. It was green from the beginning of the day to the end of the day. Okay, so we've got 1, 2, 3 days. It will be interesting to see what happens today if they manage to just waffle around between the falling 200 and the prior all-time high. We'll see what happens, okay? If they get on top of the 200 SMA and consolidate holding the higher ground, that is bullish, all right? That's a good sign. That's what you want to see. You want to see bullish gaps not getting filled by the bears, okay? See the bearish gap here got filled by the bulls, all right? Now we got a bullish gap not getting filled by the bears. All right? That's a point for the bulls. All right? Got another bearish gap. Will they fill that gap? See the gap right here between this candle open and that candle close. Whenever we start filling bearish gaps, that is a bullish sign. That is a bullish environment. All right? You want to trade long in bullish environments, right? Everything is lined up, all right? Nobody likes to go surfing when it's just a duck pond out there, okay? There's no waves, all right? You're looking for waves when you're ready to go surfing. It's the same thing with trading, okay? You don't want a duck pond, all right? That's nothing. It's good for nothing but paddle boards, all right? When you want to surf on a wave. You want a bullish environment, all right? And that's what you want. When you trade long, you want to see price move up and hold that higher ground. You want to see bearish gaps getting filled. You want to see a break over the 200 SMA, especially if it's falling or if it's flat, all right? This is bullish environment. These are the clues you're going to look for to craft your trading plan so that you're going to be able to succeed. All right? So that's T21.23. That's a 15-minute chart of the NYSE. All right? That's the listed stocks in the New York Stock Exchange. Next one is the same thing, all right? The next one is the same thing, only it's a 3-candle chart, all right? It's 130 minutes to each day, all right? 3 130-minute segments to each day. So, yesterday, all right, notice we went from green to red here, and it stayed red all the way down to, guess what? The prior all-time high. So they pulled back to support, okay? A prior all-time high was resistance at one time, okay? Because price went up and pulled back. So it made that high for the first time. Now, when price makes the higher low and shoots up over it, now it becomes the prior all-time high, okay? Because price just made a new high, all right? So they're pulling back to support. There was resistance preventing price to go any higher, all right? When price gets over it, it becomes support. So here's price action coming back to support, and the rubber band price action, or the rubber band energy from the market forces, takes over and slings price back up over the all-time high, prior all-time high there. You see we put in two red, we changed the candles from red back to green. So we got 2 green balls there and 1 red. All right, so this is a transition, price moving back. We would like to see price consolidate on higher ground and then move up over this other prior all-time high anchored VWAP, and eventually drift or trade back up to this flat 200 SMA up here, okay? Usually what happens over the 200 happens under the 200, all right? It's a little bit far. We'll see what happens. All right, let's go to look at FNGU. We follow the FNGU, all right? I follow it. I follow the FNGU because it's got 10 of the most heavily weighted stocks in the QQQ and the SPY. All right? So when I got just an ETN of just those 10 that are the most heavily weighted inside those 2 indexes, all right, it gives me a good idea. And as a matter of fact, those 10 have the ability to jerk all the other 490 securities within the SPY around. It's like the leash on the dog, all right? Wherever this goes, all right, this is going to go with it, all right? This is the leash, all right? If this goes higher, chances are QQQ and SPY are going to go higher. See that breaking out? I'm just going to go to SPY real quick, and I can see this breaking out. I can tell you that SPY and QQQ are going up, and they've made bigger candles on a 15-minute time frame based on just this price action. All right, I'm going to show you right now. Because this is going up, it will jerk both of those indexes up with it. So I go to the 15. I'm going to go to SPY. There you go. All right? You see how that works? That's why I follow the FNGU. Okay? Want to see QQQ? Same deal, right? Okay, so that's why we follow this one. Okay, when this is green and moving up, it's going to jerk the index up with it. All right, so that's what we like to see. We want to see the bulls erase the bears. Okay, so all of this price action, all right, would be nice to see. This is what the bears did. All of that from that high area, that area up there, I'm going to call that a wick, all right, down to this area. Okay, so we want to see the bulls move up here, erase what the bears did, and then go higher. All right, break that downtrend line right there. So that's FNGU. So price action for FNGU yesterday. Okay, you got green. All right, so we had some bullishness. All of the shaded sections pre-market, post-market. So we had some bullishness, and we got up over the 200. And look, for the most part of the day, we consolidated over the 200. Then we drifted down underneath, but then we recovered. And then we drifted down underneath again. All right? So they moved up and then they gave it up. All right? So they moved up, gave it up, and now we're back up again. All right? So this is the bulls engulfing what the bears have done. Okay? That's good. That's a really good sign for the bulls. That makes for a bullish environment. And that's why we follow the T20, the FNGU. All right? Got a lot to go through today. All right? Got some questions to answer. I see them coming in. I'm not ignoring you guys. All right? I'm going to get right to you. Let me just run through this real quick. Okay? Let's start off with right here. This is my routine. I do it every day. All right, so I'm going to start off with, what do I want to start off with? Let's start off with energy. Okay, this is the XLE. Okay, this is the energy sector. All right, see the spider's energy sector. It's the XLE. All right, so looking at the XLE, see the bears push it down and then they're giving it up. See, moving down and giving it up. If the bulls, look at the bulls, moving up, giving it up, and more, that's bearish. See that? They move up, they come back, and they give it up and more. That's bearish. All right? So XLE is in a downtrend. All right? But it's not moving down. In order to negate the downtrend label, all right, it's just a label, they have to make a higher high. All right? They either have to make a higher high, all right, that's this high right here, all right, or they have to make a lower high, pull back to support, and then make a higher high from that point, okay? In other words, they have to pull back, make a higher low or an equal low, and then come back up and take out the high. And that will negate the label. And it's just the label. Notice this is in a downtrend, and it's been moving up for the last 20, 30 days. Right there, since December, basically December 20th, right there. All right, they stopped moving down. Well, we call that a move down. Since the 23rd. Okay, they've been moving up. All right, so there's the XLE on the daily chart. Okay, still in a downtrend, but not moving down. Okay, now we got the all-time high anchored VWAP. All right, that's this pink line right through here. Okay, see, when price is up, excuse me, when price is up over the all-time high anchored VWAP, again, that's a bullish environment. All right, when you're up above the all-time high anchored VWAP, that's a bullish environment. All right, and that's what I like to see. What I really like to see is when they hold it up here for more than 4 days. 3 or more days is good. All right, so now we're getting 3 days. This is good. So on a pullback, I would possibly want to buy a pullback because I've seen them hold it up here for 3 or more days, up over the all-time high anchored VWAP. Now, for those of you that have TC2000, these are simple to set, okay? I'm just going to take that one off. You come over here, it says a VWAP. It's got a picture of a ship anchor right here. You click it, and you just drop it on the candle you want. Just like that. That's how easy it is if you have TC2000. Okay? There's other ones. If you have Wall Street IO, all right? If you don't have an anchored VWAP, you can go to Wall Street IO, and I'll show you that later, okay? And they have anchored VWAP on there, and their charting service is free. All right? That's all it is. It's free, and you can get it right from there. It'd be nice if you had it on your only chart that you're trading from, but I'm just saying it's available to you if you need it. We can find it on Wall Street IO, which is a free service. Okay, so XLE, moving up, giving it up. Okay, so from this breakout, notice the bulls took it from this low up to this high. we have 4 quadrants. 1, 2, 3, 4 is the top. Whenever we're in the upper third, that's a bullish environment. Okay, when price is in the upper third, that's a bullish environment. XLE is now in the bullish environment. I do expect a pullback. It would be nice if they just consolidated up here and they held this higher ground. We'll see what they want to do, all right? But they are in the upper third. That's a bullish environment. Over the midpoint, that's also a bullish environment. I would expect a pullback back to probably the midpoint, all right? And then I would be looking for the bulls to step in on that pullback. Right now, they're on fire, okay? I would wait for them to cool off, give you that nice pullback where you can set a trade that has very low risk, okay? When it pulls back to diagonal support and you see the bulls step in, then you can set that trade with a really tight stop. See, notice price pulls back right here. It's up over, pulls back to here. Now, you're looking for the bulls to step in. Now you can set this trade with a really tight stop. All right, because your stop's going to be underneath where the red stops going down any further. Okay, so that's where you want, that's where the stop goes. All right, you can put it anywhere, but that's where the stop goes in my trading plan. Okay, and once the price moves up over it, then you can move it up to break even as soon as you can, but you need price to move up to support you moving it up to break even. All right, notice price pulls back, it's up over, anchored VWAP for more than 3 days. Okay, pulls back. This is where we're going to look for one of these right here, over here somewhere, and that will be our place to buy with a nice tight stop and look for it to return back to the upper third. So that's XLE in a downtrend technically, but not moving down. All right, on the 2-hour chart, I'm sure there's an uptrend there. All right, let's take a look at UNG. UNG's on fire. I took my profit on my calls yesterday. All right, so I had 3 calls. I made 100% on those calls. I bought them here, and I sold them here on 3 of them. I sold 2 here and 2 here. I did not make 100% on those that were sold here and here. Only made 100% on the 3 that were sold up there. Price action for UNG yesterday. Higher low, higher high. Closing over the bullish trap. Over the rising 17. Up in quadrant 4. That is a bullish scenario. Again, we're going to look for a pullback to support. That would be this peak right here or the midpoint. Okay. So we can buy the higher low. But we're going to wait for the bulls to step in first. UNG is way too hot. I'd rather wait for it to cool off right now. All right. USO. It's another one that's way hot. See, now it's starting to consolidate up here. That's a good sign. Up in quadrant 4. All right. This would be the upper third. Up over 78.57. And this is quadrant 4. Price action yesterday. Lower high, lower low. Closing over the bullish trap over the 17 EMA. So there's USO. Let's take a look at precious metals. Silver and gold both now in uptrends. They took out this high. Okay, see the high there over the 17. Price action took out the high. That puts them in an uptrend. Price action yesterday, just a doji candle. Higher low, higher high, closing over the trap and over the 17 EMA. Got caught, swatted down by the midpoint right there. Here's the 12-year high anchored VWAP. Be nice to see silver get up back up on top, hold for 3 days or more, or make a move and hold that higher ground. There's silver. Still, it's now in an uptrend, all right? And just moving to the right, consolidating right now. Gold. Gold's a little bit healthier. Notice gold is up in quadrant 4. Okay, see quadrant 4 up here? That's very bullish. Gold now in an uptrend. They took out this high right here. They made a higher high. Gold, a higher high, higher low, closing over the trap over the 17. Gold in an uptrend. Okay, now we watch a few sectors. Okay, we watch the SMH, the XLK. We watch the financials, and we watch the transports. I watch a few more. We're going to start with the SMH. This is the semiconductors. Now, usually in order to have a nice, robust rally, you need technology, which is made up of microchips or the semiconductors, okay? You need technology to be in an uptrend. You need financials to be in an uptrend. And you're going to want the transports to be in an uptrend, all right? Or at least moving up, all right? So based on the SMH, here's our August low. We're consolidating up here in the upper third, up over the prior all-time high anchored VWAP, up in quadrant 4. So this is a bull flag. This is a bullish environment. It's not moving up. It's just moving to the right. The fact that it's holding the higher ground is a bullish environment. Moving from this location up to here and holding the higher ground is a bullish environment. So you can see price action in a downtrend until they take out this high. Either that or they set a lower high and then they take out the top of that. Okay? It's in a downtrend but not moving down. All right? XLK. All right? Again, from this location, see how we go up and we give it up, but not the next time we go up and we hold. So hanging out up here in quadrant 4 is bullish. There's the all-time high. You can see we're not far from it. Again, I like to see 3 days over the all-time high anchored VWAP. We're hanging out in quadrant 4. That's still bullish. The markets are still bullish. All right? They may not be on the daily time frame, but go check out the weekly. All right? Let's take a look at XLF. XLF makes a low, now makes a higher low. Okay? That's an uptrend right there. Now you can call it a downtrend because they made a low here, made a lower low there, but they took out the high. So that's an uptrend for the XLF. That's a bullish environment. Up in quadrant 4, up over the all-time high anchored VWAP for more than 3 days is a bullish environment. So we got technology in an uptrend. We got the financials in an uptrend finally. All right? And they're both in bullish environments. All right? So there's 2 of the trinity that we need. All right? Let's go take a look at the last one. All right. This is the transports, not up over the all-time high anchored VWAP, but in an uptrend because they popped this high and made a higher high. Transports are in an uptrend, but they're not up here in the upper third yet. Okay, so they're just kind of neutral right through here. They're on the bullish side of neutrality, but not quite bullish yet. All right, we want to see bullishness coming out of the transports. Show us those shelves are getting stocked. Show us that the product's getting moved around the country, and those shelves are getting restocked, and components and infrastructure and equipment's being moved to a location where things are going to get assembled or constructed. All right? So we like it when the transports are in the upper third, and we like it even better when they're up over all-time high anchored VWAP, which that is right there, okay? So we're in an uptrend, just not moving up at this time. We're in an uptrend, but we're just not in that bullish upper third right there. I'm going to hit a few more, and then I'm going to call it. We're going to look at the economic calendar. Okay, XLI. XLI in a downtrend, they got to take out this high, okay? But not moving down. And they're up over their all-time high anchored VWAP. XLU in an uptrend because they took out this high right there. Okay, XLU, that's the utility sector. Go figure. All right, price action over the all-time high anchored VWAP. up over the midpoint. They now hit uptrend status. All right. If they come back, take out this low, they'll be in downtrend status. All right. So they set the bar low. It was easy to beat that. You see that? Up, not too high, you know. They would have had to come back here, all right, to take out that high. All right, but they set the bar low and they took out the high right there. So they're now in an uptrend. Again, it's just a label, all right? You can see they're on the upper third. That's a bullish environment on the utilities. Really don't want the utilities in an environment that's bullish because it kind of spells recession. That's usually when utilities make their all-time highs is during those recessions. All right, let's check out the economic calendar. All right, try to run through this quick, and then I got to take a break. All right, higher low, higher high. All right, see them? Higher lows, higher highs, higher low, higher high. That's an uptrend. This is the U.S. dollar index. I watch the U.S. dollar index. Whenever the dollar is strong, it makes our goods and services more expensive. All right, into foreign countries. All right, they got to convert their currency to our currency. If we have a rich dollar or a strong dollar, it takes more of their currency to buy our goods and services. All right, and they could buy them from another company and it'd be cheaper for them. All right, so in order to bring money back to the United States of America, we like to have a cheap dollar. All right, because we're able to sell our goods and services to foreign countries. And that gives us a bigger marketplace. So whenever the dollar's strong, you typically don't see a rising financial market or stock market or investment market. All right, it's a little bit strange right now. The markets are higher and the dollar is shooting higher. So the dollar's in an uptrend and it closed near 108.90 something yesterday. All right, still making higher lows and higher highs. Notice the skips are getting shorter and shorter between those higher lows. All right, so it may be coming to a top. That would be nice. I see a little topping tail right there. All right, we'll see if that's going to hold and then price going to start making lower lows. We haven't made any lower lows yet, so still in that uptrend. So there's the dollar. On the economic calendar, the main event this week was CPI. That was at 8:30 on Wednesday. Okay. Today, housing starts and permits at 8:30, industrial production at 9:15, a rig count at 1, and a Treasury international capital at 4. All right. So nothing really busy that's kind of market moving today for economic numbers. CPI will definitely move the market, all right, and FOMC statements, all right, because they're going to tell you if money's cheap or expensive, all right. Whenever you have a high interest rate, money's expensive. Whenever you have a cheap interest rate, in other words, it's down below 4, all right, then you've got cheap dollar, all right, cheap dollar, cheap interest rate, all right. CPI, the Fed sets the interest rate, all right, in order to either strengthen the economy against inflation or weaken the economy to give it a lift. All right, so he'll move it down if he needs to juice the market. All right, because then the interest rates come down, people start buying because it's easier to afford if the interest rate is lower. All right, same goes with expansions. All right, business expansions. You want to expand when the interest rate is lower. All right, so there's the U.S., there's the economy. For earnings, okay, nothing today that's going to move the markets, all right? A lot of financials, all right, right here. Truist, Schlumberger is not a financial. State Street, that's a financial. Huntington, Regions, Citizens, BOK, okay? Nothing here is going to move the markets, all right? They're all familiar names, but they're not going to cause the markets to rip or dip, all right? Max Payne for today, Let me refresh it. According to the numbers, max pain for today is 582. I don't think we're going back to 582. We'll see. We got, for puts and calls that expired today, we got 2 puts for every call that expires today. So you could see a put squeeze, all right? Or otherwise called a short squeeze. So we'll see what happens, all right? Could see a put squeeze. All right, got two puts for each call that expired today. All right, now I'm going to go hit some questions. What is the calculation for your 50-yard line and surrounding lines? Tim, are you referring to the pivot? Please give me a Y or an N. Okay, he's referring to the pivot. So one of the visitors or members asked the question, how do I get my pivot? So I'm going to go to SPY. Okay, I'm going to go to my 5-minute chart. And I look at the price action where price moved in and around. Okay. And let's see what we got here. Okay. See how price comes down. This is yesterday's price action. Moves up and then comes down and stops here. Gets underneath it and then stops there. And then finally comes back up through and then tests this line. So this is the pivot for me. It's an area of interest. It's where price is telling me this is an important number because they keep trading down to this line and bounce up off of it. See how they bounce up off of it? And then when they get underneath it, they test it. And then they get on top of it, they test it again, then they get down through it. See, that's them telling me this is an important number. That's how I come up with it. I look at the previous day's price action and I see where price goes up and trades back to. We could probably move this up to here, all right? But nonetheless, we're having a breakout. It's not going to matter much whether it's 93.08, okay, or back here at 951.96, all right? Either way, we need the breakout side either way from here or there, okay? And you could use one to here if you wanted to, all right? 93.21. I'm just going to keep it right here, all right? Right around 192, 592. All right, next question. AC, on your T2123, is the red-green line still based off the 17 EMA? Let's go see it. This is the 17. Yes, that is the 17. These dots, it's not a line, it's dots, but if you back out, it becomes a line. I see what you're saying. Yes, that's the 17 EMA. All right, hope I answered that question. When you get these morning gaps, do you adjust your entry areas and stop out areas? Would you? Yes, I do. If I do get a gap, sometimes I have to make adjustments to that. Okay, but that's my plan in the morning before it happens. Again, if we get a bullish gap that gets filled by the bears, all right, completely by the bears, Rickster, I'm going to give a point to the bears. That's going to show me they're in this location, okay? They're wandering around and looking for food in this area if they fill a bullish gap. And the same thing goes for the bulls, all right? If we get a bearish gap and the bulls fill it, that's going to tell me the bulls are looking for food in this area, and I have to recognize that and give them some credit for filling the gap, a bearish gap. In other words, the bears failed to hold the lower ground, okay? So yes, I do have to change my game plan in the morning if price does gap around, all right? I hope that answers your question. All right, I got a video to render and hopefully get posted, and it's a long one, so I'm going to be off air. It doesn't mean I don't like you guys in the room, all right? All right, but I'm going to be off air for about 30 minutes. But I'll be here for questions.